Most people trying to get in quant finance, algorithmic trading, think that they're one perfect algorithm away from printing money, but that's completely wrong. When I started, I thought the same thing. The truth that I've learned by studying legends like Jim Simons and Ray Dalio is completely opposite. Only one algorithm doesn't do anything. It's a piece of the puzzle. I think it's very important to build a system that is an edge itself. You can see I've tested 100 and 100 and different trading strategies, and then multiple tests on different asset class, right? I think more than 70% performed well, but only 30% passed the validation test that I set, right? So all those strategies with the green check. I'm going to do further analysis only on those type of strategies. And I think also those strategies are good strategies, but then I did this type of analysis comparing those algorithms to my actual live portfolio. So you're going to see in this video and understand that your algorithm is not your edge, right? It's just a piece of the puzzle. So I think if you focus only on one strategy or maybe 2 or 3 strategies, that's not the key, because you have to understand that it's like all of those hedge fund and also quantitative fund, they're not trading one strategies that work well, right? But they build system that like merging multiple trading strategies, of course uncorrelated strategies. And so I think building an ecosystem is the only real edge that you can have, right? That's the only way to beat the market. And so yeah, that's why I'm sharing this type of information. I think it's very important. So you can actually have something like this, my workflow, and test multiple things at the same time. And you'll be, if you think about someone that is trading like one algorithm, okay, and someone like me, there's no way that the person that is trading like 1 or 2, 3 trading algorithms is going to be profitable in a few years, right? Because there is also alpha decay, that is like when your trading algorithm start to lose money, okay, and you lost the edge, the actual edge, right? So the key is to understand that and then not focus only on 1 or 2 or multiple trading algorithms, but building a system that let you build new edge quicker than you lose them, right? Keep in mind that every trading algorithms, so any edge could be like lost. You can lose every type of edge in a few years, in a few months. They're not going to work forever, right? So if you have a system to build new algorithms and test them and validate them quicker than you lose them, I think you're in the right spot. I wanted to show you my GitHub, and this is my public repo. It's for quant analysis. It's not a beginner, but if you know how to code, you can just open it and then you can get it. And I think there's like, yeah, okay, here, all of the instruction. I think that's something that could help you. And there's like multiple engine here. It's not the structure and the, let's say, software that I'm building for my quant research and also my AI workflow, but that's something very useful. You can see the MFE efficiency, and also you can see the analysis of drawdown and build like a portfolio and analyze the equity and different type of reports, because like it includes quant stats, right? That's another GitHub repo that I want to show you in this video. So all of those type of reports that I showed you before are made with quant stats. That's a useful quant repo that you can find. You can go on my GitHub here and then make sure to follow me so you can be updated, because I think I'm going to share multiple GitHub repo here for free and public. So yeah, make sure to follow me. And yeah, you can go to the stars here and you can find all of the GitHub repo that I saved. And that's my one I showed you before. And then this is the quant stats. I think that's very useful. You can use it, it's free. You can ask Cloud Code to use it. You mention in your prompt to use quant stats. If you code without any coding agents, you can easily get it from here, all of the commands. And those are the visualization that quant stats let you have. I think it's useful. is just for showing you those type of quantitative reports. You can also overlap some benchmark. In this case is S&P. The AI agents is using all of the engine that I built to test all of those algorithms on multiple asset class. In this case, you can see that from 2012 till I also some data set from 2004. You can see in this case that's on the Nasdaq, and that's from 2000. And so yeah, that's like after the 2008 financial crisis. I need to get higher quality data from 2004 if I can find it, because I found 1 minute open high low close from 2004, but it was like 70% quality data, so I'm not going to use it. So yeah, that's pretty high quality data. You can see, and what I'm doing here is not actually trying to find the best strategy ever, okay? It's just testing multiple strategy on multiple asset class. In this case, of course, like doing this, you can easily do data mining, trying to do cherry picking on the best performer. So you have to be really careful. Sometimes I should avoid that, but sometimes I'm testing logics on forex pair that shouldn't be tested on. So it's like trend following, breakout strategy, etc. that for the nature of the asset couldn't work. So in this case, it finds something because it did optimization on the in sample from 2012 till 21, and then it started losing money again. But that's different. That's EURUSD. I also have gold from 2004, and that's pretty high quality. So with this AI workflow, I'm testing all of my idea in the quickest way possible. Then I do run an analysis test. After the first analysis, the different steps are having an idea, or maybe finding online a type of idea, then write logics, let the AI agents build everything and test everything. I'm trying to get as quick as I can on that. And then after that, I have the report. And then from this, I run like a different type of algorithm that is an engine that is like analyzing all of the different report and check them and see which one could fit the portfolio. Not all of the strategy are going to be good enough for the portfolio. After that, I'm going to translate the logics in MQL5 and test that on MT5 with realtics data. So in the end, the survivor, they're going to be included in my demo portfolio for 1 or 2 months. And then after that, I'm going to add the algorithms into the live portfolio. So that's my full goal right now. I think that's pretty much it. Probably 2-3 years ago, I was thinking, let's build the best trading algorithms ever. But then after a while, and after studying and reading all of the top hedge fund manager books, I realized that one algorithm is nothing. It's actually nothing. So yeah, one more thing I realized recently, the true mathematical power of diversification. Through content making on Instagram, I realized that diversification is very important. One of the best and important things, because I was studying YouTube's and Instagram algorithm, and I found out that that's not going to be interesting for you. The concept is the diversification applied to different things, right? Because you can apply diversification on the process of building a portfolio, and you will have something that looks like this, okay? But also you can apply that on different things, like in this case, Instagram. Make sure to follow me, Rational Edge, and I show financial visualization like math and formula, and also portfolio construction, that is brand new. And yeah, I found out about diversification because it was something about how many posts do you do on Instagram, because you have a 2-3% probability to go viral. The more you post, the better the probability is going to be. It's great to have something that looks great, awesome, the best content, but then you're going to be eaten by someone that is posting 5 reels a day, right? Maybe like not great, but if he is really consistent with 5 posts a day, it's going to be way better than you if you have only one great post once a month. Why I'm saying this is because it's exactly the same thing in quant trading, because you don't have to build the best and great looking trading algorithm, but you have to build as many as you can with no correlation, of course. And then you're going to increase the probability of succeeding. So yeah, that's pretty much it. And that's the philosophy that I'm trying to get out of all of the content and books I'm consuming right now that is about quant finance and all of the other hedge fund manager that I mentioned. Two Sigma, all of the quantitative fund. I'm trying to get as many information I can about those type of quant fund. It's all about get as quickest as you can a new edge before you losing the previous one, and also giving the right risk to each type of algorithm and avoid overfitting. And yeah, that's pretty much. So as you can see, in this case, let's see this type of strategy here and how it did perform on Bitcoin. Let's take this screen here. As you can see, this is the equity. This is 1 minute open, high, low, close. And it seems really good. Okay, you can see the performance here. It has a profit factor of 1.53. And so yeah, basically this is the all report that my workflow built for me, and I'll show you now how this workflow work properly, because those are all of the reports. If you go here, you'll have the sets, and sets, why I say sets, because like this workflow here is also building the algorithms. Okay, so in this case we'll have every type of strategy. Like in this case, okay, you'll see this type of file that the same workflow it built me. So basically every time I want to build some type of algorithm, this entire workflow is going to build everything for me at the same time. As I said, this is the MQL5 algorithm. You'll see also the set file here. So we open this set file here for USD, and you'll see that is kind of insane, because to get something that work properly on Python and then is going to perform as well in MQL5 is not that easy. Of course, it's not real text data tested yet, but I think there should be multiple steps. So the first one is doing data scraping, looking for logics that work on multiple asset class, and then you build the algorithm because you want to test that on a software that you can actually use to trade. So MT5, so you have to translate the logic from Python to MQL5. That's what my workflow is doing. In the end, it's going to give me this type of set file here. And this is like the same as the MT5 set file. So you can actually export and import this type of set file here. And you'll see this type of set of parameters in MT5. So in MT5, as you see, this is like the same algorithm that I showed you before, okay? So I didn't modify anything. I did just export from my file here, import the algorithm, okay? And then those are the set file, upload the set file here, and that's it. Those parameters here are the same. So you can see, and you'll see that it's mind-blowing, because now we have to wait a few seconds. Yeah, I think my computer is running multiple things at once. Okay, now it should work well. And then we should increase the speed here. And you'll see, this is how it is training, okay? It's mind-blowing, because you'll see that soon, you'll see that this equity line, okay, it looks exactly the same, it looks exactly the same as the equity line that my workflow built in Python. Why is it mind-blowing? Because the process to build this and the algorithm in Python is taking me probably 15 minutes, okay, and a few Cloud Code tokens, okay, let's say 15-20 minutes, okay, and I can do multiple tests and different type of tests, because on Visual Studio you can do actually whatever you want, right? So you can even test different things or indicators that you cannot actually have on MT5, or even test on MT5. So you'll see this equity line is going to be exactly the same, and that's one of the biggest improvement I did on this type of workflow, because the hard part is not to find alpha, find the good set of parameters. Of course, avoiding overfitting is one of the best things you should focus on, right? But when I was building this, the most difficult thing was trying to replicate the MT5 trading algorithm, okay? So how the MT5 software works and how it handles the data set and build the indicators and everything else, and copy that from the MT5 software to my workflow here, because actually right now is doing that, right? So as you can see, now the test is almost done. Of course, it's lagging a little bit because I'm running multiple stuff, and also I'm running this type of backtest while I'm recording this, so it's finding a hard time. But you'll see soon what I was saying. And yeah, actually that's one of the biggest improvement I did since a few months, because now is my edge. It became the speed of implementing new algorithms in my portfolio, right? If something it doesn't work, it doesn't show me like statistically significancy, okay? So something that is actually not a coin flip, okay? I can easily implement that in a few hours. You have to remember that you cannot implement a new trading system if it works well. Even on TIX data, you should always test that on 1 minute first, then real TIX data, and then at least 1-2 months in demo accounts. So it's like live trading, but of course demo money. And now you'll see it perform. It was taking me a lot of time to do that, right? And now I can do it in 15-20 minutes. And this is the end up result. Of course, I downloaded the MT5 report and it looks almost the same. Okay, so guys, as you can see, this equity line, it looks almost the same as this one. Remember that this dataset here stopped exactly at the beginning of 2026. I didn't update it because I didn't have time. So it should stop right here, and it's exactly like on this little drawdown here. So I think like here. So yeah, guys, it looks exactly the same, and this is an insane thing for me. It's really, really good. And also the statistics, as you can see, it says 1,340 trades, and here is a little different. It's like 1,209, but you have to remember that the dataset here ends on beginning of 2026. Yeah, it took 100 trades more in 6 months. It's reasonable. I could easily test it till the beginning of 2026, but I already did that, so I don't need to show you anything. We want to focus on the metrics because that was something else to take a look, and something else that I think is very important. So like how MT5 is managing to calculate all of these type of metrics. And okay, so as you can see, the profit factor is 1.49. Of course, this backtest, it doesn't has the same amount of trades, so it changed a little bit, okay, and it's actually almost the same. And then we have the recovery factor here. It says 16.79. That's insane. Here's almost the same. Of course, we have 130 trades more, so it totally makes sense. And then I tested it with 100 as a risk. Everything is divided by 10, but the total net profit is 31,000, and in this case is 316,000. It's multiplied by 10, and it's exactly the same thing. And then we want to look at the max drawdown. In this case is 18,000, like almost 19,000. And here it says 2,000, so it could be like 20,000, right? So I think this is an insane result for me, and I'm really happy for all of the work I've done on this, because now you see only one strategy, but actually here I have more than 100 strategies, and I can easily test them all together. I've built a different engine that analyzes my live portfolio with all of these new algorithms, okay, and see if some of them are able to improve the overall live performance, okay. And so you have to understand that like with AI, you can do everything you're doing with like a 10x or maybe 100x leverage, right? So of course you have to remember you can't be delusional, right? You cannot expect to have the same type of performance after this type of results. It doesn't make any sense, because you have to understand a backtest. Previous results cannot predict anything, cannot guarantee anything, right? So it's very useful because it helps you to build confidence and build something that it could perform well. And then you multiply that for every type of algorithm you're building, and then you build something that could survive the markets, right? And so, yeah, in the end, the goal is to reduce the variance of the portfolio, and then having multiple algorithms that like they're not correlated each other, okay? And that's pretty much it. I tested this on multiple asset classes and it performed as well as in this case. So every algorithm that I'm building on the workflow is performing like at least 80% of the Python results. So that's a great result. And also you have to consider that, yeah, for example, this is on gold, right? The same exact strategy on gold from 2004, right? This is Python result, 1 minute open, high, low, close. So of course, like the profit factor is like way lower, but of course it took like 6,000 trades, but still something like this, it did not perform better than the underlying asset. Okay, you have to understand that. And of course, like this is in sample, this is out of sample, and you have to understand that this is like, of course, it fit the parameters on the data set. Okay, that's reasonable. But then it did like a quick optimization. Okay, it's not like a full optimization. It's just like optimizing with big steps some parameters. So of course it could be a little overfit, but that's over 22 years of data. So yeah, and see, we can check that, and we'll have a recovery factor of 17.30. Okay, of course, like that's, it could be even way too much, but like, okay. But at the same time, this is the goal performance. Okay, so yeah, of course it looks way better because it did perform better. Okay, but you have to understand that something important is to understand is that by adding an item on your portfolio, you're reducing the variance. You're not betting everything on one thing, okay? Because like you couldn't predict the performance of Go, right? You didn't have the ability. And then, yeah, of course, from 2004, gold did till now almost 1000%, and it reached like 1400%. By having this type of algorithm, you didn't outperform the goal, but then your drawdown here is way lower than the actual goal drawdown, almost 46% drawdown. And then here, I think it's like almost the same. Okay, no, a little less. So you had right now like a -% of drawdown. So you're not beating the actual market, but you are reducing the variance and you're building something that you could actually trade right now. Make sure to follow my channel. I built the Instagram page, so you can follow that. I'm going to leave that in the comment. In my bio, you can find the Discord channel. It's brand new, so you can join. Inside, I'm going to build the Quant Lab. I'd like to have a community of quant traders, algorithmic traders that are interested into build like a great community and build something all together, and everyone should give value. If you like the video, leave a comment, make sure to like this video, and I'll see you.